Welcome back. Well, that's the SGX Nifty up 118 points, 17,748 on the Nifty futures is what the indication is from the SGX Nifty. And I mean, today could be one of those days where the SGX Nifty actually is right, going by what's happening globally. Remember, the Nifty futures closed at 17,651. It's almost a 100-point gap. And then, of course, we'll take it from there. We have Gurmeet Chadha joining us, Managing Partner and CIO at Complete Circle Consultants. Gurmeet, good morning. Thanks a lot for joining us. It's been such a sort of rocking market. This market's been ignoring all kind of global weakness and just moving on, especially in the financials. Let's begin with that. Your thoughts on the kind of rally that we have seen, not just the banks but NBFCs and others, like non-lenders as well. And what would be your preferred picks here?
So, Anuj, I think banks obviously are a preferred trade in a rising interest rate scenario. Also, the fact that the credit costs were contained, I think we passed the COVID test in terms of banks stress test quite well with most leading banks. Even some of the smaller banks which had some concerns also, were able to contain credit costs roughly around 2%. So even the smaller ones which had stress, whether it was RBL, Federal, IDFC, etc. Have been reporting decent improvement, and the larger ones are clearly doing better now. So I think those will continue to do well. Also, the valuations, especially even with after this run up, also is about 2.5 adjusted book value, which is not really stretch. As far as compared to premiums we used to command. Insurance, I think, is one sector we are looking at. It's been an underperformer for last 2-3 years. A lot of things happening, regulatory changes, COVID-related claims, etc. Discussed HDFC Life multiple times, but I think SBI Life has been standing out. What's impressed me is the fact that not only the AP growth has been very, very good. Also, the VNB margin, if you see last quarter, they were at almost 30%. It was almost like a 6.5-7% jump. And VNB is your value to new business. It's a measure of profitability. Also, their mix has been changing very well. So non-par savings is almost now 28%. And if you add protection business, that's 38-40%, which is where this VNB margin is picking up. Also, I think we are looking at Lombard. Also, I think structurally, I think that remains another good sector. I think what they are trying to do is focus within segments into profitable sub-segments. So within motor, more into CVs now. Within health, they are reducing dependence on group health, focusing more on SMEs now. A lot of new launches as well. I think the combined ratio should come down. It got elevated. It should come down to maybe 101-102% with better ROEs. And obviously some of the old-time favorites like CDSL and others, which are a more a structural play. There was some dip in transaction volumes and market-related activity and fewer IPOs, etc. But I think still remains a structural trend. And now with this insurance policy thing, I think that's something also we are looking at.
Okay, all right. We will put our colleague Yash, of course, broke that story yesterday, a day before yesterday, and of course got confirmed yesterday. We put details out, and we'll put more, by way of analysis, what this could mean for companies like CDSL, etc. This entire dematerialization push through the course of the day. Gurmeet, hi, good morning. Thanks very much for being here. What do you make of this Indigo news flow, Gurmeet? Will this keep gains? By the way, do you like the business? Do you like the space? Would you want to own a business like that? And if you do, what does this sort of, sale from one of the promoters mean for your investment view?
See, I think, Prashant, on the contrary, near term could be positive. It's been like after it's at a 6.5-7% discount. I think this is a 3-year dispute now between the Bhatia and the Gangwal family, and probably would start focusing back on core operations. I don't like aviation per se as a sector, but maybe in the near term, because you're still at about 15 times FY24 EPS. Travel has picked up, both business and tourism. If you see the load factor, which is a measure of the utilization, was 80%. Both domestic and international now are pre-COVID levels. Indigo market share is 54%. I think what worries is these changes in ATF prices, high oil prices, there's adverse currency movements. It's a very complex and gruesome business to analyze. Also, I think the smarter replacement of older aircraft should add to the cost. But I like more if you want to play this in terms of people moving out or revenge travel and tourism. I think hotel and QSR, and there are other better spaces to play this.
Gurmeet Chadha is still with us. Gurmeet, this is a big tailwind, right, for India as a whole, and even for, say, crude-consuming companies. I mean, tire stocks have been at 52-week highs because of the way crude derivatives have fallen. What would your pick of the pack be here between tire, paint, aviation?
I think combination maybe. So paint remains it's part of the broader home improvement theme, which been constructive on for quite some time. I think any impact there, I think should be good. Even tires, I think tires will also, other than obviously the input cost benefit, I think what we are seeing is a bit of a revival in auto sales, both PV, a bit of CV, even in the off-road segment where Balakrishna also operates in. So I think that remains a pivotal. But these are, as I said, near time we need to watch it more closely in terms of how it plays out. But in general, my sense is the way energy crisis is playing out in entire Europe and all. I think we are maybe, I'm not an expert here, but we are probably headed for lower energy prices.
Okay, all right. So that's basically the view coming in on a bunch of names and a couple of sectors as well. Gurmeet, in the broader markets, mid caps and small caps are. I mean, I was looking at the strength yesterday as well. The Nifty, of course, comes back every day of this week, right? I mean, the last so many intraday dips are bought, but the broader markets are cruising along nicely, even yesterday. So incredible strength there. What's anything you like in that space, and any comments in terms of what we are seeing? Almost euphoric moves in some of those spaces there.
Yep, Prashant, I think there is resilience in the market, and we sense it in terms of the flows we get both from the retail segment and the wealth segment we operate in. Both on direct equity and MF side, I think there is strength. I think the discussion even in family offices is shifted from not if but to when, and I think people are trying to figure out what is in the price. I think we just got to be a little careful here, and because while we have heard multiple stories of this decoupling various times, I agree India stands out in this on a lot of fronts. But looking at what's happening right now, there could be some collateral damage in terms of some debt crisis somewhere, something blowing off. So just got to be a little careful and not get carried away. And I think the best hedge is to pay a reasonable price for good earnings. There are a lot of pockets which are down, and maybe a value add probably in this time of the year probably would help. Something in IT because stocks are down. You're getting a lot of IT stocks at 13, 14, 15 earning multiple. There's still some names in auto despite the run up. Fairly reasonable, even in some of the banks and finance. I think got to be a little selective.
Okay, got to be a little selective. What's your view on Syngene if you've tracked it, Gurmeet? Because there was this blog even which got executed, the stocks underperformed, but at current level, would you sort of look at it?
Not really, Anuj. I think where probably I see this entire one space we like, which I said earlier, is this API CDMO space, and especially CDMO and biologics. I think what probably we will see over next 2-3 years is a big shift of China plus one there. I think a lot of regulatory approvals, a lot of commercialization and validation of molecules will come through, and it's a huge opportunity. The pharma outsourcing market is pretty huge, and you will see a lot of and this business is lumpy. So you got to buy when things are down, whether it are TVs or Loros or so many other names. Those are the spaces we like, which we think are more structural. Individually, I think it's very difficult to track. This is one sector which you got to be very selective and careful about, especially as far as compliance is concerned.
Okay, Gurmeet, stay on. We'll take a break. We'll come back and discuss market technicals. Mitesh Thakkar and Sudarshan Sukhani will be with us.